My name is Andrew Williams. I am the president and CEO of New Pacific Metals. We're advancing two major silver discoveries in Bolivia, our most advanced silver sand project. We just published a pre-feasibility study a couple days ago, and we're just a couple months away from publishing our preliminary economic assessment on our second project, Carangas.
Great, Andrew. Lovely to see you. It's been a while, I think about 14, 15 months since we saw you on this platform. Let's deal with today's news, the PFS on silver sand, and then maybe get into, how you've kind of got to this point and remind people, what you've been up to. So give us the headlines.
Sure. So headline numbers from the PFS, after tax net present value, $740 million. That's at $24 silver, 37% IRR. After tax, looking at the payback period under 2 years. And the other metric that we like to look at is the NPV relative to the initial CapEx. So that ratio is over 2 for the silver sand project, and really puts it in a class of being one of the best, if not the best, undeveloped precious metals projects anywhere in the world today. And I think really a testament of the quality of the discovery of silver sand, where we've gone now from preliminary economic assessment last year to pre-feasibility study. We've taken the deposit, and the engineers have hammered it. The metallurgists have hammered it more. The accountants have hammered it even further. And the project still stands up as being incredibly robust. I think is a real testament to the quality of the discovery at silver sand.
Well, I think it's been quite a journey for silver, let alone your company, over the past 3 years. In that period, we saw all sorts of inflationary pressures for a lot of businesses. Balance sheets being blown up, economic studies being blown up. Getting the study done now in the kind of comfort and, I guess, slightly more settled landscape, does that give you a huge degree of comfort or certainty around the ability to actually get this thing built and the economic component of this to remain?
Absolutely. Yeah. I think our PEA study was done 2023, so I think we had already had a lot of that initial surge of inflation behind us in the rearview mirror. Silver was still in and around the $20 mid-20s range at that time, and since then, as part of our pre-feasibility study, I'd say that most of the inputs have been relatively stable. Like our capital cost did go up a little bit from our PEA study, but that was more related to scope changes. Like, for example, we had to, as we did more detailed engineering work, we figured we had to shift more waste from the early stages into the pre-production stage. And as well, our metallurgical testing told us that we needed bigger leach tanks, for example. But as far as the unit costs go across the board, from mining to processing to G&A on a per ton basis, those stayed remarkably aligned with what was published in our PEA study a while ago. And really the biggest variable that changed between then and now was the silver price, as you've alluded to, which again was, we used $22.50 silver in our PEA study. We used $24 an ounce silver as part of our PFS, but at the time of the PEA, our price was more aligned with the spot price at the time. But given that we've run up to $30, we made the decision to keep it down at 24, but at $30 silver, which is in and around where we're at today, the net present value of the silver sand project in the PFS is over $1 billion. So certainly a very, very strong macro backdrop with more stabilizing prices on the input side, with a much more robust silver price.
Right. Okay. So you certainly get a grip on the cost side of things, and obviously a long ways to go when it comes to the kind of economic studies and firming up before you get to FID. Some of the other factors which are going to be important to you, if you were giving yourself advice, the finance version of you was giving the minor version of you advice in terms of doing business in Bolivia, what would that be? Because there haven't been too many mine builds in the last 20 years, about three or so in the last 20 years in Bolivia, and none of recent times. So what are you going to focus on?
I think the first point is just to be patient. It takes time, right? As you're saying, this is Bolivia. The mining history is you can't debate it. It goes back 500 years, and the mines that you reference were great mines that were built in the last cycle, and they've operated very successfully through different iterations of government. But as of right now, it's okay. It's time for the new generation of mines to be built, and going through the process right from starting at the local community level, right up to the very highest reaches of government. It's a process, right? It takes relationship building. That's one-on-one meetings and follow-ups and socialization and explaining the projects and flipping through presentations. All that work takes a huge amount of time, and going right from, again, the communities, which we have a very strong team on the ground that's engaging with them, to the Ministry of Environment, who's ultimately the one that'll issue the environmental permit. It's been a long time since they've issued a permit for a large-scale open pit mining operation. So I think just patience, persistence, and transparency are really the most important ingredients towards having success on that front.
Right, and when someone talks to me about the team that you've got in place, because I think you're right. There's a new kind of paradigm. This is the new generation of mining, but it's also a new reality out there. So patience is one aspect, but to forge those relationships will take time, and sometimes miners don't have time, or they think they don't have time. So again, what's the process actually on the ground for you with the team that you've got there?
Yeah. So, I mean, I guess first I'll just flag that something that is unique about our company is that we've got strong backing from major strategic corporate investors. Silvercorp Metals, 27% shareholding, and Pan American Silver, they own just under 12%, and they've been operating in Bolivia for over 2 decades. So I think we're blessed to have shareholders that are understanding of the process that's in front of us, that can give us maybe a little bit more patience, let's say, than a traditional junior fighting from quarter to quarter trying to raise money would be faced with. But as far as on the ground, one of the things that we take a lot of pride in is our 100% Bolivian team. That's something that means a lot to both the local communities and the governments that are the key stakeholders in this process. So we've got a very strong country manager who's just done a remarkable job quarterbacking this thing forward in the country, and the team that we've assembled around him is that's one of the nice things about being in Bolivia is, yes, it's been a while since there have been mines, but still mining is very much a big part of it. And so there's a lot of very talented people available, right from across from permitting to engineering to geology to finance and the like. And so we've been able to put a very strong team together. And every time I go down there, I was just down there for the last couple of weeks, these people they take pride in this, and they see it as a very important part of work and a meaningful thing to do for their country to bring these projects forward and online. So I think that's really good. We've also got an expat, a guy named Dustin Van Dorselaer. He's a very experienced miner. He's worked throughout Latin America for almost the entirety of his career. And so he is an anchor in our office in Bolivia, kind of just offering that support and guidance in the background for the team that's 100% Bolivian that really does the frontline work. And we think that's a really good structure to have as a company, is to sort of have the best of both worlds, have the support from those of us in Vancouver and Dustin, who comes in and out of the country, but really it's our 100% Bolivian team that interface with the communities and the government, and we think that's a very effective way to do business.
So that's Pan American, obviously, with experience in country. And Silvercorp, not so much. They're kind of focused on China.
Their operations are in China. I think they've got an acquisition currently in the works with a project in Ecuador. So they are diversifying. But they've got very good operational experience.
Lon Shaver, good guy. So how do you position them? Are they kind of like a passive investor? I mean, do they just sit there on the stock? Do they kind of follow their money with their September raise, $35 million? Do you expect them to maybe, I don't know, sell out? I mean, what's their actual role here?
I mean, I think they've said all along that, the cliche is they'll do what makes the most sense for their shareholders, whether that's, sure. They understand how hard it is to find high quality development projects. I mean, it is really, really hard. There's not very many of them left in the world. And we've got one, and hopefully in September with our PEA, we'll show that we've got two. And so I think, those are really attractive projects. I think at the same time that they're not going to, I don't think, just sort of let go. But at the same time, I know Juan's been on the public record saying that, like, if there was a situation where they were faced with a proposal that would give them a handsome rate of return on their investment, that they would also, be open-minded to that type of a scenario. So I think, they've been very supportive shareholders, I think, from just saying and doing all the right things. Right, we've got one of their directors, Paul Simpson, on our board. He's very active and engaged director. We're very fortunate to have his guidance and insight, and we've got the same relationship with Pan American Silver, where again, they're major shareholders in us, and they've got one of their senior technical people on our board. Again, a very active and engaged board member. They were, invaluable to us, providing us with guidance and assistance throughout certain elements of our pre-feasibility study. And so I think we draw on the experience and the balance sheets of both Silvercorp and Pan American Silver to make us stronger.
Yeah, no, just thought it's interesting to discuss, because obviously they're sitting at 27% of the company. It's meaningful. I guess the optionality sits both ways. If you guys carry on doing what you're doing, you may become interesting to them, especially after the kind of failed attempt of trying to get OreCorp. Right. Okay. So back to the project, if we may. So you kind of got two projects. You've also got the third project, Silver Strike, which is that still sort of parked up on the side? Would you like to monetize that, or is that something you'll get back to?
As of right now, we're constantly analyzing our options across all three of our projects. How we structure the company. Do we chop things up? Do we keep it all at once? Do we sell? Do we build? So that evaluation is constant. We haven't made a decision yet, but as of right now, the Silver Strike project, we're going to keep it on the shelf there and focus our financial and intellectual horsepower on the Silver Sand and Carangas projects. We've got, between the two, 400 million ounces of silver resources, and so it's really where we can create the value right now is on project advancement, as opposed to going out and drilling and finding more.
Right. Okay. And talk to, you referenced it already. Obviously, the silver price has come back after a long time in the doldrums. But it's only kind of 6 months in. In terms of your planning, in terms of your thoughts around raising additional capital at some point, how much does that play in the mix with regards to how you time things, or how ambitious, or do you change plans? How do you kind of view that?
Yeah, I mean, I think we've seen the silver price firm up really nice over the last several months. Silver equities have perked up, but then given back some, and we're certainly in that peer group. So it's helped, but it's still I wouldn't say it's a raging bull market by any stretch of the imagination. So our share price is the direct drive of our cost of capital, and we're in a relatively fortunate situation where we completed a Canadian $35 million raise last September. We think that we'll end this year probably with around US $15 million, which again would give us another runway for 2025. So I think our next raise, that's still a little ways down the road for us, but nonetheless, time does fly when you're having fun. So we do need to be thinking about the next steps there. But as of right now, we've got the cash that we need to continue to advance our projects, the technical studies, and the work that we're doing on the permitting front. But yes, ultimately, the cost of equity capital, like any junior, we don't have production, we don't have revenue, is an important part of the equation.
Yeah, I'm just steady as she goes. Obviously, we've seen a lot of kind of quite strange reactions from companies as metals have started to move. I mean, I guess some instances it's going to take the money when it's there, and others where perhaps lithium hasn't kind of panned out the way everyone thought. That maybe some regrets at not taking it sooner. So who knows? So with regards to Bolivia, like I say, it's probably not a place where most people have parked up their money. And we've seen a lot of activity in South America, which has been not helpful, I think, in terms of news headlines in the last sort of 2-3 years, whether it be political wrestling with elections, whether it be constitutional change, etc. Bolivia, good history, but what's it like actually on the ground?
Well, I mean, gosh, we've made two amazing discoveries. Greenfield. You look at across the world, where are new precious metals discoveries being made? This isn't like the 1990s and the 2000s. It's shocking how few high quality discoveries are being made around the world today, and we've made two of them in a short amount of time, and we've done it with an all-in drilling cost of $220 a meter. That's throwing everything at it, including executive salary allocations and the like. So it is our ability to execute on the ground has been very, very good in Bolivia. The infrastructure is great in the country. You can drive around the paved highway system. We've got grid power projected at our silver sand project at US 5.5 cents a kilowatt hour. So operationally, and you look at just the success of San Cristobal, San Vicente, San Bartolome. Previous to that, it was Battle Mountain and then Newmont that ran the Corocoyo mine throughout the 90s and the early 2000s. I mean, there's a history of very strong mining operations in Bolivia. It's just there hasn't been one built in a while, and I think when the government came, that's almost 20 years now into their running, this with their socialist agenda, I think it really took a lot of folks paused and soured on Bolivia. But I mean, we're in a very different situation today, where the government is very much in need of new sources of foreign investment dollars, and just like the country's done throughout its very long history, when it comes time to reinvigorate the economy and bring in new investment, they pivot to the mining sector. And so we're quietly confident that our two projects are very well positioned here, as the government is beginning to more openly embrace companies and projects such as ours to bring the dollars and investments into the country.
Right. Okay. And so obviously back to the project, if you don't mind, in terms of the capex, it's a decent sized project. It's not crazy, but you're going to need to raise a ton of money. How does that Bolivia factor work with this kind of foreign direct investment when you're out looking? I say it's been a while since people have invested in Bolivia. Who do you talk to? What type of money are you talking about? And it's a ways off, but give me a sense of what you're thinking.
No, it's good. And I mean, part of my job is I'm out there engaging with the different financial advisors and the like about just that question, right? It's never too early to start asking. And it's funny that it's like, okay, there hasn't been a mine built in Bolivia in say 15 or 20 years, but a lot of the guys, oh yeah, I was involved in financing San Cristobal back in the day, and here's what we did. So I mean, it's been a while, but there's also still a lot of gray hairs in and around the industry that are very familiar with Bolivia, and are kind of like, yeah, no, it's totally a place where you can finance and build a mine. And so if you look at silver sand, just specifically trying to answer your question, right? Let's say $360 million, round numbers. Really nice thing about the project is that we get into some high grades very early in the project's life, and so there's a sub 2-year payback period on the capital at $24 silver. That's a lot faster at $30 silver. And so the front-end loaded nature of that production profile, 15 million ounces of silver per year each of the first 3 years. I mean, it's a beautiful, if you were to put some sort of a debt repayment schedule up against that, it's a beautifully financeable project. So we think that's a really good, strong advantage for it, and it'll mean that it can take a fairly significant debt burden and limiting the amount of equity that we'd have to raise to build the mine. But I think again, we're not dealing with a $1 billion project. Like you said, $350 million. Let's say you do, I don't know, a couple $100 million of debt, and maybe you've got some subordinate hybrid instrument, and you fill the balance with equity relative to where our market cap sits today. I mean, it's still a very manageable dilution number. And again, that's assuming that we go down the path that we finance it and build it. But again, as we alluded to previously, I mean, we've got Silvercorp there, we've got Pan American Silver there, and there's it's a small industry and people talk, and there's others that again understand how hard it is to come across high quality development projects. So we think it'll be a very competitive process when it comes time to finance and build the project.
Right. Okay. And with regards to the necessary skills in country do that. I guess in a minute, what you're alluding to there is it's probably not going to be your problem, right? It's just somebody you'd expect to set this up for someone to come in who's got a bit bigger balance sheet and been there and done that before. But the ability to do that is predicated on having groups that can build in country. And again, it's been a while since anything's been built in Bolivia. Do you think that is going to be a sort of stumbling block at all, or how does it work?
I don't think so. There's contractors that, again, the oil and gas industry is very active in Bolivia. There's lots of civil earthworks projects that are in Bolivia. As part of our pre-feasibility study exercise, we source a number of quotes from a lot of firms, including our mining contractor quote that we use in our pre-feasibility study. They've got operations in Bolivia and know the country really well. So I think that's actually a source of strength for Bolivia. Again, going back to, there is mining there and the people are very good. I think if you go back to, when I was initially, before I joined the company, trying to do a little more research on Bolivia, I went back to old Pan American Silver conference call transcripts from when they successfully completed their expansion at their San Vicente operation. They just said, like, for what we did, for the amount of money, I mean, it really is a testament to the ability for Bolivians and in Bolivia to build things, very high quality for a good price. And they're saying like, we couldn't have done this anywhere else in the world. So, I mean, I think there is a lot of expertise in the country just because there hasn't been a mine in a little while. That expertise is still there, working in different segments of the economy, and it's not a major concern of us. It's not like we're operating up in the Arctic or we're operating in some country that's never seen mining before. I mean, it's very accessible where we're at in Bolivia. The infrastructure in the country is really good, and there is a deep mining history there.
Right. Okay. Now, I'd obviously expect a silver company CEO to be full of the joys about what the silver market's going to look like. So let's get into some macro thing. I'm trying to understand the kind of macro barriers to entry, or quite frankly, some of the pull from the silver sector for this funding, or for hopefully some competitive tension around who the heck wants to take you out. So macro environment as it comes to and pertains to price, fantastic. Mexico being slightly traumatized over the last 3 years from most Canadian juniors, quite problematic, but they're all to man said, look, the whole industrial use of silver is the thing that's going to be the game changer for silver moving forward. What are your thoughts on the matter? What are your thoughts on demand drivers going forward?
Yeah, I think it's a great question. And if you're betting correctly, yes, as a silver CEO, I'm bullish on the price of silver. I think the interesting thing about silver, right, relative to gold, 90% of the demand is investment, and there's probably 10% of it that's industrial. Silver, it's closer to 50-50 between industrial and investment demand. And so if you look at the demand drivers on the investment side, all the arguments that you put forward for gold also apply for silver, but with more intensity. They often say that silver is like gold on steroids, right? There's not, because a lot of that demand is soaked up industrially, there's almost no supply response from both the investment and the industrial demand side for silver. And so usually the beta of silver is about 1.5 times that of gold. So again, plug in your views for financial asset returns, which really drives the gold price and then really drives the silver price. And I think it's the story about inflation and fiat currency debasement. That narrative has been very well told, and that applies to silver. And if you like the narrative for gold on that front, silver gives you even more of that. But what's unique to silver is that the other half of the equation is the industrial side, which is, again, really, really significant. I think the Silver Institute put its report out probably a month or so ago about the latest demands. And once again, it's the demand from, in particular, photovoltaic cells, which have silver as a key input. Those numbers continue to grow, and I think they have surpassed projections every single year for the last several years. So that continues to be a very strong driver. I know that in the increasingly electrified world, copper gets all the attention as being the silver is a better electrical conductor than copper, right? It's the best electrical conductor of any of the elements on the periodic table. And so you have to think that, between photovoltaics and others, there's going to be new and novel uses of silver that will be arising as we're moving along this electrification trend across the world. And perhaps we don't even know some of the new drivers for silver demand that are going to hit us. But I imagine that, again, if you're sort of long electrification, silver's the best, right? It's the best across any of the elements of the periodic table. And we're seeing that in the photovoltaic demand. We're seeing that in the electric vehicle demand. Again, you start packing these cars full of more and more components and electronics. The demand has come up quite significantly. So I think on the industrial side, it's also a very good demand story. The precious metal side is a very good demand story. But the last piece that I'll add to this debate, because again, I'm not an expert on photovoltaic supply and demand. I'm not an expert on financial market supply and demand. But what I will caution folks is that with silver, 75% of it is produced as a byproduct of other base metals, right? And so if you think about a normal, let's say oil, right? There's a huge secular demand for oil that, like, let's say China's rapid industrialization over the 2000s commodity cycle. And you had a natural supply response. You brought in the Canadian oil sands, you brought in the fracking throughout the United States, and that really helped satiate demand. And we've seen that for even in copper, right? A big copper demand and primary copper mines coming online, satiating that demand. But with silver, because 75% of silver is produced as a byproduct of other metals, it just doesn't move the needle for most silver production. With a massive wave of demand, the supply response is muted. And so that's what can create really violent price swings. And the case study that I point people to is, if you look at molybdenum, which is similar, where a lot of it is produced as a byproduct like silver. In that commodity super cycle, it was perhaps the single best performing commodity across the suite. And that's because in this wave of demand for, let's say, molybdenum, there was just not this same supply response because most of it is produced as byproducts. And the same thing is with silver. And so I think when you combine that very strong macro backdrop with the fact that most of it's produced as a byproduct, meaning a muted supply response, I think it really creates some combustible conditions for the silver price. And that's the part that I'm really looking at, is what'll happen in that situation where it really ramps up and the supply is just not there to meet it.
Yeah, no, that's some great insight there on the kind of silver markets. Especially reminding people that most of silver is created as a byproduct from other mining other commodities. But I think the interesting bit for me will be to see whether this gravitational pull that gold has with silver, where silver sometimes slingshots past it and then sort of rapidly falls away again as it rotates around gold. Whether or not the industrial usage will break that bond. And then and if it does break that bond, in terms of if there are indeed multiple use cases for silver, because then you getting into industrial, you're also getting into the world of substitution potentially further down the line as technology change. So I'm not sure it'll be entirely healthy to be too focused on the industrial component and retain some of that connection with the precious. But who knows? We'll have to see how it all works out.
Yes, I'll just add that it's the world of forecasting commodities is really, really tough, right? I mean, I've seen it all. Like, I remember when it was several years ago when there was that big nickel price squeeze and nickel was running, and it was like, oh my gosh, nickel's going to go to the moon. And then we had a period of time where nickel's, it's been a tough go, and who knows, other times where we get very bearish on certain commodities, it can be a very bullish scenario. So it's really hard to forecast. I think what I've observed over the years is focus on the business, right? What's the business doing? Are we creating value through project advancement, the drill bit, both? I mean, that's really what we're focused in on, and we're just very grateful when the silver price manages to cooperate as it has been recently, and hopefully it's time to pour our first bars, that the supportive environment continues and maybe gets even a little more supportive. But that's really the focus here is the projects, right? We can't control the silver price, but we're certainly grateful for the way it's been cooperating recently.
Why do these metals always want to go to the moon? think we need to be a little bit more down to earth, don't you? Right, right. Look, it's a nice reminder of the story. I do appreciate that. Obviously, I'd love to hear from you about Carangas when the PEA comes out. That'd be great. See what that does for you, for sure. So, stay in touch. Let us know how you get on. Okay.
Sounds good, Matthew. Yeah, pleasure chatting with you.